This isn't just another rally, it's a bull market. And like riding a mechanical bull, you can't do it half-hearted. You've got to lock in your feet, grab those reins, and yes, clench those booty cheeks because every dip and fake out will try to buck you off. After all, only those that hold on will get the rewards. Now, I know some of you thinking, wait, silver's overbought. RSI's flashing red, stochastics are screaming. Aren't we due for a correction? It's a fair question. But here's the truth. Markets don't move just because an indicator says they should. When the fundamentals, debt, deficits, inflation, global demand are this strong, momentum can run way longer than the chart suggests. I want you to hear how Gary Wagner puts it because he nails this point better than I can.
We're looking at a historical moment in time, and that moment in time will continue to yield higher prices as long as the fundamentals that took us to this point are still within the environment.
That's exactly the perspective we need. Overbought conditions don't automatically pull the price down, especially when the fundamentals that are driving the markets haven't changed. Think about it. Has anything fundamentally changed as it relates to this bull market? No. If anything, the macro drivers have just gotten stronger. Over the last year, the only thing that has really changed has been the silver price, with it being up almost 45%. Please don't fall for the price trap. Price and value are very different measurements. We aren't traders. So let me say this clearly. We are early in a bull market. We aren't here for 45% returns. We are here to ride this bull until the whistle blows or the bull gives up. We are riding this bull market for 450% returns. As I showed in the previous video, the average return during the previous bull markets has been 413%. If you're lucky, you'll experience 2, maybe 3 bull markets in your lifetime. So don't screw this up listening to the noise. Instead, focus on the signals. We are in one of the moments where you will look back years from now and say, that was the opportunity of a lifetime. Do you think I'm exaggerating? Okay. Just think back to 2021 and 22 when silver was in the low 20s. How many of you wish you could go back now and buy more gold and silver? Now, let me say one other thing very clearly. What is good, Stackers University? It's so wonderful to have you here with me today. While the intro runs, I want to encourage you to join the other 11,000 channel subscribers so you don't miss this fire content. Okay, where was I? Yes, the end of silver price suppression. We're not just watching price action. We're watching history unfold. Silver pressing towards 45 and 46 isn't just another rally. As I shared in my last video, there's something much bigger happening. On Tuesday, short of a meteor hitting the earth, that will be silver's first ever quarterly close above $40. And this is when silver suppression ends. And the ceiling holding silver's price back potentially cracks and really starts shattering. First, the close will start the process of converting $40 silver from resistance to support. I know it feels like everyone on YouTube is telling you that we're due for a price correction, and that may be true, but look at this chart, and correct me if I'm wrong, but they've been saying that ever since gold passed $2,000. If you would wait for that pullback, all you would have done is watch gold go up another $1,700. Remember the saying, bull markets climb a wall of worry. Don't get me wrong, a pullback is 100% certainty. The problem is, no one knows when that's going to happen for sure. My point is simple. Markets don't just move because the indicator says they should. Here's the reality. This incredible price run does create a dilemma for us as investors. But this is where your mentality is critical. It's normal to be asking, is this a bubble? Should I buy, sell, or just wait it out? But because you're a member of Stackers University, you've learned that we don't let our emotions do our thinking. We think in the presence of our emotion, and we definitely don't catch FOMO. So let's talk about some data that can only help us. Let's look at the money flows into ETFs in particular. After years of relentless liquidation, just this week, we had one day where 5.58 million ounces poured into silver ETFs. And that was after 2 prior days of inflows. While I couldn't find clean, verifiable numbers for just this week, I did find the following. Over the first half of 2025, 95 million ounces have flowed into silver ETPs, exchange traded products, globally, pushing the total holding to 1.13 billion ounces. And that data came from mining.com. In a recent 5-day stretch, SLV alone saw 345 million in net new capital, and that came from the ETFdatabase.com. And finally, across all precious metal ETFs, they have pulled in about 2.7 billion in 1 week, which comes from ETFaction.com. The momentum is clear. Institutions are flooding in, not trickling. That kind of flow doesn't happen by accident, especially at resistance zones between $35 and $45 for silver. That kind of flow is not retail FOMO. That's institutional money positioning. And on top of all that data, we had Jeffrey Gundlach telling investors to put 25% of their portfolios in gold. We also had Morgan Stanley recommending a 20% allocation to metals. This is on top of multiple banks consistently increasing their price projections for gold and silver. Now ask yourself, does that sound like a bubble? Or does it sound like the smart money quietly stacking before headlines catch on? Speaking of quote unquote smart money, anyone else find it awfully suspicious how the bullion banks in particular have turned bullish and started recommending metals? Call me a conspiracy theorist wearing a tinfoil hat, but maybe their change of heart about metals is because they finally unwound all their short positions. Or maybe they're covering themselves so clients don't ask, why didn't you tell us about gold and silver? To me, all this provides clues that silver's suppression is about to end. For 60 years, silver has been spoofed, shorted, capped. We all know about JP Morgan paying billions for manipulation charges. No matter how frustrating it has been, we can't forget that suppression only works until it doesn't work anymore. My apologies, but I couldn't find the Rick Rule clip, but he made a great point. He said price suppression or manipulation is only effective when you push the market in the direction it's already headed. This is why this quarterly close is so pivotal for silver. This close officially flips the momentum switch on silver, which means the banks and the shorts can't control and push the market down. Now their only hope is to push it up and make money that way. In my opinion, that is why banks have turned so bullish. They know their old tricks don't work in an uptrending market. As Martin Armstrong said, quote, once silver clears 50, then 75, suppression fully collapses. When that happens, that's when the market psychology will flip from apathy and doubt to mania and conviction. That's what we are positioned for. Regardless, it's all proof that suppression is breaking, not just in the charts, but in the narrative and people's psyche. Here's one of the most bullish indicators that excites me. If the current market share of precious metals and related investments in the US is less than 0.5%, what happens to price if that number moves to just 5%? Take a look at the Bank of America Fund Manager Survey results. And let me point out that 39% of managers have 0% allocated to metals as of this September. I don't even want to think about what it would mean if investors and fund managers actually try to get close to that 20% recommended allocation. Can you imagine ETFs having to go buy physical silver and being forced to pay market price whether they like it or not? That's not a drip of money flows. That's a tidal wave. And your job is to be like a surfer and ride that wave. Ultimately, this isn't just another rally. It's a bull market, and it's not a gentle ride. And just like riding a mechanical bull, it's something you can't do without. You've got to lock in, grab those reins like your life depends on it. And yes, clench those booty cheeks, because every fake out, every dip, every scare will try to run you off of the market and run you off of your positions. Those that hold are the ones who will make the greatest returns. In the comments, yes or no, are you ready to ride this bull market with your cheeks clenched tight enough to make diamonds? Do you think banks will manage to smack silver down below 45 one more time for good old time's sake? Will you still be buying silver once it breaks $50? Or you can simply put an A+ in the comments if you love stacking, want to show me some love, or if you just want everyone to know that you always stack smarter and never stop learning.